I've got some absolutely insane news for you today. It looks like the Swiss move incredibly fast, and we're seeing massive potential bankruptcy risks and contagion risks at Credit Suisse. We're talking about credit default swaps pricing in huge premiums this morning, 1,000-bit premiums, and you won't believe what the Swiss version of the Federal Reserve just did. But before we dive into that, let's give you a little bit of a breakdown on what's happening. A lot of the crisis today surrounding Credit Suisse's stock was caused by the Saudi National Bank, the largest shareholder of Credit Suisse, declining to increase their stake. This led to massive fear and pandemonium, as they were blaming regulation, saying they didn't want to go above a 10% stake because they would be subject to more regulation. But everyone's like, no, you just don't want to throw any more good money after bad, especially during a liquidity crunch. This caused a lot of freakouts this morning, and we had some shocking quotes from Sequoia Capital talking about how the collapse of Silicon Valley Bank feels like a death in the family for the tech community, and now we've got Credit Suisse. Now, Credit Suisse is a huge bank. We're talking about $580 billion of assets under management. That's substantially different from Silicon Valley Bank, which was at around $211 billion of assets under management. So, what does this mean for the European Union or Switzerland, especially when their largest shareholder doesn't want to invest more? Well, good news. Switzerland's central bank has swiftly entered the scene and is bailing out Credit Suisse if necessary. That's right. According to Bloomberg, Credit Suisse Group AG will receive a liquidity backstop if needed, seeking to restore confidence in the troubled lender after a record slump in its shares. Credit Suisse was down over 30% in pre-market trading and ended the day down about 14%. Now, a lot of bankers are saying that this bank is different, that this is not contagion. They're pointing to Credit Suisse's poor management, but the Swiss Central Bank and FINMA have been discussing ways to stabilize the bank after this tumultuous day, sparked by the firm's largest investor ruling out increasing its stake. Now, let's talk about the potential consequences here. BlackRock CEO Larry Fink has warned of more seizures and shutdowns coming in the financial sector, stating that this is just the beginning of the crisis that we're facing. That's a scary thought because it reminds us of the 2008 financial crisis. But what's next? What's going to happen? Are we going to see more banks fail? Is Credit Suisse too big to fail? Well, according to the Bank of Switzerland, the answer to that is yes. It is considered a systemically important bank and is getting a liquidity backstop from the Swiss version of the Federal Reserve. But let's take a moment to discuss the Federal Reserve and its potential actions. With the Credit Suisse crisis unfolding, projections for monetary tightening have shifted. Now, there's a greater likelihood of a 0% hike compared to a 25 basis point hike. This could shift as the markets react to the breaking news. But what's my opinion? Personally, I think we should rule out a 50 basis point hike and a rate cut. We're really debating whether the Federal Reserve is concerned enough about this financial crisis, this banking crisis, this liquidity crisis, that they end up pausing. But a pause could actually be bad for markets. It could signal that the central bank is concerned about the potential for the Credit Suisse issue to spread throughout the financial sector. If the Federal Reserve were to step in and provide liquidity to the markets or take other actions to calm investors' fears, this could help stabilize the situation and prevent a more significant financial crisis. However, it's important to remember that the Federal Reserve will also be weighing the risks of inflation and other economic factors when making their decisions. So, they may not take immediate action if they believe that doing so would have negative consequences for the overall economy. The Credit Suisse situation has raised concerns about the health of the global financial system, and it's not entirely clear yet how far-reaching the effects of this particular issue will be. As we have seen in the past, financial crises can often have a domino effect, causing problems in other institutions and even entire economies. In order to avoid a potential crisis, regulators and central banks around the world will need to closely monitor the situation and be prepared to act if necessary. Now, with all of this in mind, the question remains, what is going to happen with the markets moving forward? Are we going to see a recovery? Or is this just the beginning of a bigger crisis? I don't have a crystal ball, but I can tell you this. It's essential to be prepared for whatever comes our way. Make sure you have a diversified portfolio, and don't be afraid to make adjustments as needed. Stay informed about the markets, and keep an eye on global events that could have an impact on your investments. It's also crucial for individual investors to remain vigilant and be prepared for potential market turbulence. Diversifying your portfolio and maintaining a long-term perspective on your investments can help you weather periods of uncertainty and potential market downturns. In conclusion, the situation with Credit Suisse could signal that there are underlying concerns about the health of the financial sector, and the Federal Reserve may need to intervene to maintain stability. However, it's essential to remember that the central bank will be weighing various factors in their decision-making process, and it's not guaranteed that they will take immediate action. As an investor, it's crucial to stay informed and be prepared for any potential market fluctuations or economic developments. As we bring this discussion on the Credit Suisse situation and its impact on the financial game to a close, remember that the world of finance is a battlefield, and only the strong survive. Stay sharp, and don't let these curveballs throw you off your game. I hope you enjoyed our time together, and if you did, smash that like button and subscribe to the channel for more high-level knowledge on finance and the global economy. Hit that notification bell so you stay ahead of the pack and never miss a beat. Got something to say? Drop your thoughts in the comments below, and let's keep the conversation going. Sharing your perspective will only make us all stronger. That's it for now, my friends. Stay hungry, stay informed, and never stop chasing greatness.